Imagine a world where robots aren't just, in the movies, but actually working alongside us, taking on tasks you might not expect. What if these bipedal humanoids could one day rival an industry as absolutely massive as automotive? Sounds pretty sci-fi, right? Welcome to the deep dive. Today, we're plunging into a really fascinating business thesis: bipedal robots versus the auto industry, a 2045 outlook.
Okay,
We're looking at a future that, well, might be closer than we think.
exactly. Our mission today really is to unpack the current state and the future trajectory of these humanoid robots. We're drawing out the critical insights from this analysis, basically giving you a shortcut to understanding the forces at play, the big predictions, and yeah, even the surprising hurdles they face. The goal is to give you those aha moments, without the information overload.
Right, and we're looking at a stack of sources here that explore the next couple of decades, specifically 2025 out to 2045. We'll dig into the why now for their emergence, their market potential, and, what it would really take for them to compete with, maybe even surpass the colossal auto industry. It's a huge question.
It really is.
Okay, so let's unpack this then. These aren't just lab curiosities anymore. Humanoid robots are actually moving into real-world pilot deployments right now. So what's behind this sudden acceleration? Why now? What's making them emerge with such force?
Well, it's fascinating. It's like a perfect storm brewing, a confluence of powerful forces creating what you could call an ideal adoption stack. First, you've got a significant demand pull.
Okay.
We're talking about a genuine labor squeeze, driven by some pretty stark demographics.
Yeah.
The OECD, for instance, projects a severe labor crunch stretching right through 2060. Think about this. The old age dependency ratio is basically how many retirees per worker. It's expected to hit about 52% by 2060. And at the same time, working age populations predicted to fall by over 30% in like a quarter of OECD countries. So this creates this undeniable urgent push toward general purpose automation. Businesses just won't have enough people. It's a structural thing.
So a clear need, a deep systemic challenge, not just temporary.
Okay.
But beyond that demand, what about the technology itself? Has something fundamentally changed, or is it just evolution hitting a tipping point?
It's definitely a tipping point, and that's where the supply push comes in. And it's really compelling. We're seeing rapid, almost breathtaking advancements in key areas, breakthroughs in multimodal and agentic AI.
Right, the AI that can see and understand and act.
Exactly. That, combined with much lower cost actuators, the robot muscles and joints, plus better batteries, smarter sensors, and these powerful edge compute platforms. Think Jetson or Orin-class processors.
So the brains are on board the robot itself.
Precisely. They can process complex stuff and make real-time decisions locally. This combination, it's unlocking genuinely new capabilities, general purpose manipulation, situational awareness,
Yeah.
robots that get their surroundings.
And it's not just theoretical anymore, right? We're seeing this in the real world now by major companies.
That's the key difference now. We're moving past simulations into actual production environments. Real pilots with blue-chip operators, that's crucial. Amazon, for instance. They've been actively testing Agility's digit humanoids in warehouses. And not just moving boxes, they're training them for those last 10 meters delivery roles.
Interesting.
And BMW. They ran a successful pilot with Figure O2 robots down in Spartanburg. The robot performed sheet metal fixture steps right on the chassis line. These aren't minor tests, they're integrated.
Integrated into core operations.
Okay.
And to top it all off, serious money is flowing into this space. Big bets are being placed.
Indeed. Capital formation is accelerating fast. We're talking mega rounds to scale up manufacturing and AI. Figure AI, for example, just secured, $675 million?
Yeah.
From Microsoft, NVIDIA, Jeff Bezos, OpenAI,
Yeah.
the heavy hitters.
Yeah.
Agility is reportedly seeking around $400 million.
Yeah.
Aptronics already raised $350 million. These aren't just speculative bets, they're strategic commitments. It shows deep belief in the potential here.
Okay, so we've got this powerful momentum, a labor need, the tech catching up, real-world proof, serious cash. It paints a picture of an industry ready to explode. But can even this perfect storm let bipedal robots actually challenge, the giants? Let's benchmark the auto industry first. Just how big is that mountain?
Well, let's be clear. The global auto industry isn't just big, it's a colossal economic engine. I mean, in 2024 alone, nearly 93 million vehicles produced worldwide.
93 million.
Yeah. Generating trillions in annual revenue. Vehicle sales, financing, after-sales, parts. It's immense. For humanoids to even begin to surpass any broad definition of auto, they'd need to capture multi-hundred billion dollars in annual revenue. It's a staggering figure.
Truly huge. So, given that context, what's the current market outlook for humanoids? How big do analysts think this market can get, say, medium term?
Goldman Sachs has been tracking this closely. They model a market they call material, but yeah, not yet automotive scale.
Mm.
They project a total addressable market, or TAM, about $38 billion dollars and maybe 1.4 million unit shipments by 235.
Okay, $38 billion by 2035.
Right. And what's significant is that this is a sharp increase from the earlier estimates, so confidence is growing fast.
Okay, now here's where the analysis gets really interesting. Can they actually hit that auto industry scale by 2045?
Right.
What are the scenarios?
It does lay out a spectrum, and it's pretty eye-opening. In a base case scenario for 2045, you're looking at maybe $130 billion in annual revenue. That's with 2 million annual shipments, an installed base of 10 million robots, and an average selling price, ASP, of around $40,000.
Still very significant.
Very. Then there's the bull case. That reaches $450 billion in annual revenue, 5 million shipments a year, 30 million installed robots, and the ASP drops slightly to $30,000. Major industrial player territory.
Okay, but the big one, overtaking auto.
Right, the hyperbull case. To hit that $2 to $3 trillion level, I mean, the numbers are almost hard to grasp. 12 million annual shipments,
Oh.
an installed base over 100 million robots, an ASP down to $20,000. And crucially, very high recurring software and service revenue, like $20,000 per robot per year.
Wow, so the value shifts heavily to software and ongoing services.
Exactly. It implies these robots aren't just hardware. They're constantly learning, upgrading. Their intelligence becomes as valuable as their physical form. It's a huge shift. Ambitious, absolutely. But the analysis suggests it's not technically impossible, just extraordinary.
So bringing it back down to Earth slightly, what's a more likely scenario we should be thinking about for 2045?
Well, the more probable outcome by 2045 seems to be annual revenue somewhere in the $6.1 to $6.5 trillion range. So $100 to $500 billion. Now, that's not overtaking the entire auto industry, but it still gives humanoids huge strategic importance. They'd be rivaling big subsectors of auto like powertrain or after sales, and easily surpassing many current tech hardware categories. A major industrial force, no question.
Right, but for any of that scale to happen, those costs have to drop dramatically. What's the picture on pricing today, and where is it headed? Are we talking a massive price drop?
Absolutely. Cost reduction is critical. Right now, industrial humanoids like Agility's Digit. Historical guidance was under $250,000. Vendors are quoting service rates, maybe $30 an hour, aiming for a sub-2-year ROI in specific high-value tasks.
Okay, but still pricey.
Yeah, but the cost-down vectors are really exciting. Apptronik is aiming aggressively for their Apollo robot to be under $50K in mass production by 2026.
Under 50,000 by 2026. That's soon.
Very. And look at companies like Unitree pushing boundaries on the consumer developer side. Their G1, around $13,500 in 2024 prices. The R1, even potentially near $6,000 in 2025.
$6,000.
Now, granted, these aren't industrial workhorses yet, but they show the bill of materials costs are plummeting. And you expect those classic learning curves to kick in. As volumes go from thousands to millions, you'll see costs drop 15%, maybe 25% per doubling for actuators, gears, batteries, hands.
Like we saw with computer chips or TVs.
Exactly. Plus the software skills. You develop it once, deploy it across the whole fleet. That amortizes costs incredibly effectively. It's an S-curve, just maybe supercharged.
So where do we actually see them first, beyond these initial pilots? What's the adoption roadmap look like over the next 20 years as costs fall and capabilities rise?
The roadmap suggests a pretty clear phased approach. 2025 to 2030. Think narrow tasks in structured spaces. Stuff like tote, consolidation, kitting carts together, machine tending, line-side delivery in factories, often on night shifts, less human interaction. Pilot programs expanding to multi-site rollouts if they prove reliable and safe. Amazon, BMW, they're validating this phase right now.
Okay, phase one. Structured environments, narrow tasks.
Then 2030 to 2035, the roles broaden quite a bit, still mostly in factories and warehouses. You'll see turnkey skills packs for things like pick and place, screw driving, quality checks, breaking down pallets. We'll also see more robot as a service or RAS pricing, pay per task or per hour, and thin teleoperation layers so a human can jump in remotely if needed.
So more versatile within those environments.
Right. That Goldman Sachs $38 billion TAM by 2035, that feels like a credible floor for this stage.
And the final phase, out to 2045.
That's where they start moving beyond highly controlled environments. 2035 to 2045. Into semi-structured spaces, maybe even service sectors. Think back-of-house retail stocking shelves, inventory, Healthcare logistics, moving supplies in hospitals. Elder care assistants help with mobility, fetching things, maybe even construction prep work. And early out-of-facility tasks like depot-to-door handoffs for deliveries.
Okay, so really starting to interact more with the wider world.
Exactly. And
Mhm.
critically, that means safety standards and liability frameworks need a major expansion beyond traditional industrial safety cells. That's a big one.
Yeah, absolutely. So as capabilities grow, how do these companies actually make money then? What do the business models look like? Is it just selling robots?
No, it's evolving, definitely moving beyond just a product sale. We're shifting from a simple CapEx sale, buy the hardware, get a warranty towards RIAS, robot as a service, pay-per-hour, pay-per-task performed, like a
Ooh, a
utility.
subscription model, almost.
Sort of. And ultimately, the goal for many is a platform model, offering the operating system, a store for specific skills, fleet management tools, simulation for training, teleoperation, that early 30-hour service pricing, aiming for quick ROI. That's the first step towards this recurring revenue service-driven world.
Makes sense. So in this competitive landscape, what gives a company a lasting edge? Where do the moats get built? What's hard to copy?
Well, several key areas stand out. First, hardware innovation is fundamental. The precision, efficiency, cost of hands, actuators. Think about how complex a human hand is. Replicating that reliably, affordably, efficiently for long shifts, that's a huge engineering challenge. Companies that build a strong barrier.
Right, the physical capabilities.
Second, data and software. Learning from huge fleets of robots, building comprehensive skill libraries that creates powerful data moats. Imagine one robot learns something and poof, thousands learn it instantly. That network effect is massive.
The collective intelligence.
Exactly. And third, safety certification. Navigating complex regulations like ISO 10218 for industrial, ISO 13482 for personal care, especially as robots move into human spaces.
Yeah.
That's a huge hurdle. Proving safety consistently takes time and serious investment.
Okay, sounds great. Lots of potential, but it can't all be smooth sailing. What are the roadblocks, the bear theses? What could go wrong?
That's a critical question. There are definitely significant challenges. One bucket is technical hurdles. Real-world dexterity in messy, unpredictable environments. Sustained reliability day in, day out. And comprehensive safety certification outside cages. Still really hard problems. Liability frameworks are immature too.
Yeah, the legal side.
Then there's hype and valuation risk. Some media reports raise concerns about maybe overstating capabilities at times.
Right.
Or leadership churn, like changes in the Tesla Optimus team. Stuff like that can impact investment or customer confidence if promises aren't met.
Yeah.
Overhype is always a risk with new tech.
True. Anything else?
And finally, geoeconomics. Tariffs, export controls on critical bits like motors, magnets, sensors. That could really drive up costs. Plus, China has a strong hardware lead in some areas that could tighten supply chains or create intense pricing pressure globally.
Okay, lots to watch out for. So for those of us following this closely, what are the absolute critical things to track over the next 5 years, say 2025 to 2030? What signals tell us if this is really happening?
Good question. There are specific indicators, like a checklist. First, look for recurring revenue proof. Are those RAS contracts actually delivering measurable productivity gains? Is uptime consistent across multiple sites? Watch Amazon's multi-facility rollouts, BMW's follow-on orders. Does the value proposition hold up in the real world repeatedly?
Okay, proof of value. What else?
Second, that hardware ASP glide path. Are we really on track for enterprise robots under 50K by the late 2020s like Aptronic targets? And then under 20K for mainstream use in the 2030s? That price drop is non-negotiable for mass adoption.
Got it. Price track. Third.
Third, standards on liability. Watch for updates to ISO 10218. Broader adoption of things like ISO 156.6 for collaboration, ISO 13482 for personal care outside of cages. And what are the insurers saying? Their willingness to cover these robots is key.
Right, the regulatory and insurance pieces. And finally,
Keep a close eye on geopolitical dynamics, the competition, especially between China, think Unitree, Fourier, and the U.S. How do supply chains, robot pricing, tariffs play out? That will shape the whole global market.
okay, so wrapping this all up, what's the bottom line? Where does this leave us? The conclusion seems clear. Within 20 years, bipedal robots are very likely to be a strategic, triple-digit billion-dollar market. A pervasive industrial impact seems almost inevitable. But overtaking the entire auto industry by 2045, that still feels like a hyperbole scenario. Needs over 100 million robots, massive software revenue. Probably not the base case today.
Probably not the base case, no. But it does frame the immense potential here. This space absolutely deserves serious attention, especially if you're involved in logistics, manufacturing, or services for our aging economies. And maybe a final thought for you, the listener.
Hmm.
Given the speed of development, this confluence of factors we've talked about, how might your daily life really think about it beyond factories and warehouses? How might it be impacted if that hyperbole case does happen? What are the implications for service jobs, for personal assistants, even for our basic understanding of what work is and who or what does it?
A really provocative thought to end on. Thank you for joining us on the deep dive. Keep exploring, keep learning, and we'll see you next time.